Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some of the top stocks from today, some of the big winners, and yeah, show you some charts from stocks that were actually heading higher today on this big down day for the markets. As the markets are under pressure, you know, there are always bright spots, and we have a good way of finding them, so I recommend you checking out our new chat on Discord. It's a really nice service, and we're putting out alerts all through the trading day. If you look here at the CHFS chart, this was the big winner today, closed up 337%, even though it was at much higher levels earlier in the day. You know, the high of day was 24.45 and it closed at 16.50. We did time this top today perfectly. We had alerts put out in our chat down here in the fours. We have members that got in this on the fours, so congrats everyone. We also have a stock bot that put out alerts in our chat that the share price was being halted in the fours, so everyone had a chance to get in this early. What we were looking for during the day was key resistance levels. It broke above the 50-day simple moving average here at 966. It broke above the gold line here, the 100-day simple moving average at 1217. And then we were looking at this August resistance zone, and it busted through that as well intraday. And what that did is it put this June high close on deck. And so we were calling that 2150. It was actually a little bit above that. And we wanted to see the share price stay above that level once that level broke. You can see the upper wick on today's candle traded temporarily above that level. And so the next key level to break was going to be the opening price on this last candle of June, and it failed to hit that level and started pulling back, forming that long upper wick. When it pulled below 22, that was the signal to lock in gains, that it was possibly going to pull back and consolidate. We also had information about a stock offering, and so if you look here on the 15-minute chart, this is the chart we were working on during the trading day, and when this doji formed here at 11:45, we were thinking that it possibly could take a breather, but it didn't have, notice it didn't have the big climax spike on the volume. You want to see a big spike on volume above the other volume bars, and notice EMA4 support was holding. We were, our strategy was to keep riding, and so we were waiting for that climax spike, and once the candle at 12:30 here broke above 22, then we knew to be on guard. We were looking for a red candle to form to signal the chart was breaking down, and that did happen here at 12:45. So this was the signal to lock in gains. You had a brief opportunity of about a half an hour to lock in gains in that 20 to 24 range. So congrats everybody that was in our chat today. Well done. The candle here at 1 o'clock that closed below EMA4, that signaled downside risk, and the chart was breaking down. And notice how the share price continued lower after that point. So the close below the middle Bollinger Band here at 3 o'clock, that signaled more downside risk. It has to get above 1726 to head higher. The key level to break on the upside is you're gonna want to see a break above high close resistance. So you want to see the support level here at 13 break. If it drops below 13 tomorrow, that's going to signal more downside risk. And then to the upside, you want to see a break above this 23 high close level, and that would signal more upside. If 13 breaks, then the target to the downside is going to be the 50 simple moving average at 972. So yeah, really sweet move for CHFS today. Congrats to everybody in the chat. That was a phenomenal way to trade. Keep up the good work. Okay, let's look at LEDS. Yes, this stock was actually alerted yesterday in our chat, believe it or not. Yesterday, the close, it was breaking this 200-day simple moving average. See this red line here? We'd been watching this stock set up. Notice that the volume bars were picking up, but they were still small. And it had this slow uptrend going where it turned the 50-day simple moving average into support, the 100-day simple moving average into support. And then we were looking for a close above the 200-day simple moving average. It's this red line at 261 to signal more upside. And that happened yesterday. And we put out alerts intraday during the trading day. This is from yesterday, as you could see here at 10:52 yesterday. Thinly traded stock breaking the 200-day simple moving average at 260. If it closes above the 300 SMA at 323, will be on deck. As you can see here, the call was down here in the twos, and then as everybody knows, this ran huge. Check out our new chat here. This is the premium service that we have. We have multiple chats. We have the crypto chat, marijuana sector chat. We have educational information. So yeah, I recommend everybody come in and check this out. You can come and can get in with the free link to check out our services. And so, yeah, the call was made yesterday that LEDS was breaking out. And so notice today it busted above that 300-day simple moving average that we were talking about yesterday, and it really ran. It hit all the way up here at 1050. So see how it pays to be in the chat. If you just got this alert yesterday, I mean, the opportunities are there. The charts are being posted all day long. All you have to do is take the time to, a few minutes out of your day to keep checking in and seeing what plays we have on deck. And so now the close above the 300-day simple moving average with the pullback from high of day, that signals the candles could work back into the bands. And then you have EMA4 at 409 is the first support level on a pullback. And then you've got the 300-day simple moving average at 322 is the key level to hold. If you look here at the weekly chart for LEDS, this is going to show you why it pulled back. So when a stock is running and it breaks above the 50, the 100, and the 200 either day or week, or it could be on a 15-minute chart, when it breaks above the moving averages and it hits the 300 simple moving average, this happens to be the 300-week simple moving average, many times that will signal a climax, and that's exactly what happened right here. When it hit up here at $10, that was the signal to lock in gains. If you just take this advice from this video, one thing, just a little tidbit of information, if every time a share price hits that 300 simple moving average and you lock in gains, you will be glad that you did 9 times out of 10. You can always reload if it breaks back above that level. You could have exited around 10 here, and then that would have set you up for a reload on the pullback if support holds, or if you exit here and then it breaks back above, you can always jump back in. But that 300 many times signals the top, and once again it did here. It's an intraday, it's a temporary top. This is a weekly candle. The weekly candlestick will not set until the closing bell on Friday. What you want to see is it stay above this red line. This is the 200-week moving average at 574. If it can stay above that level, then that's going to signal more upside. If you see it drop below this level tomorrow or on Friday, that's going to signal downside risk. The candles could work back into the bands, and then you could see this EMA4 or down here at the 100-week moving average at 339 tested. The big resistance zone to break is going to be this cluster of candles between July and October and September. I mean, notice how this is multiple months of failing to break through this 725 resistance zone. So it's a huge level to break. If you can see a close above the 725 level, that's going to put the 300-week moving average back on deck. Notice there's huge volume behind the move this week. There's a PSAR bull flip. So yeah, it just needs to follow through. Okay, let's look at the next chart here. Oh man. Okay. I'm not sure why my computer just did that. Sorry about that. A little technical difficulties here. Just give me 1 second. Let's see here. Okay, I'm sorry about that. I apologize. That was a little technical glitch. Yeah, I just trying to do too much on my computer at once. But yeah, let's look at TVIX here. Okay, so this stock closed up 7% today. Yeah, and I really apologize for that lag error, but I don't want to redo this whole video because of that pause. Apologize about that. So here's TVIX closed up 7%. So we alerted this play back here on was it the 9th here? So on this candlestick here with the big volume, we put out alerts in our chat, and we put them on stock twits. And what we were looking for was a close above the middle Bollinger Band. Notice how it broke intraday. The warning was put out. Be careful. It's got to close above that middle Bollinger Band to be a good play. Because if you look back here on the 25th of October, it failed to break that level and continue to consolidate. And so this was the day to take a starter. And then when it got back above the next day on the 10th and closed above, that was the signal to continue with the rest of the position. This has been a great place to be while the markets have been under pressure. TVIX and UVXY, and actually UVXY calls have been on fire, and that has been the best way to get the most out of this move, playing volatility. So what's going on now is you've got a close right here at the closing price on the 25th. Notice that when the share price pulled back below the middle Bollinger Band, this is the exact same place that it closed at today. So it's got a double top with this same price from the 25th. If it can break above that level, this 960 resistance zone, then we're looking at the 50-day simple moving average at 1059. That is the next target if support holds. Notice how the upper Bollinger Band is starting to hook up. I mean, notice you've got the EMA 4 here, bull crossed EMA 8. The pink line crossed the lime line to the upside. That signals the start of a new uptrend, along with the candles staying above the middle Bollinger Band. As long as the middle Bollinger Band at 869 is holding, that's this dotted purple line, the uptrend is intact and the signals to keep riding for a longer term swing trade. If the share price drops below that middle Bollinger Band, it will be a risk to hold. So yeah, so far this has been on an epic run. Congrats to everyone that has been following our plays in the chat. Okay, look at NSPR here. This is another one of our chat plays. We've got a lot of them. Closed up 23%. We had been watching this thing like a freaking hawk, and we've been looking for another close above this gold line here. That's currently the 100-day simple moving average at 41. Notice how it had closed above that level back here on the 24th of October. You know, it tried to close above this level back here on the what is this, the 9th and the 11th of October. It pulled back, closed again above it on the 24th, pulled back. All these candles attempted to close above. Notice all the wicks busting above it or hitting it and pulling back. Well, today was finally the day. It finally closed above that level on a volume spike. Nonetheless, that is what you always want to see when a share price is breaking resistance. And so notice it came right back up to the key resistance zone. Similar to TVIX, it has to break this high close here from the 9th. That's currently at 50 cents. If it can close above 50 cents, that's going to signal more upside potential, and we'll be looking for a run up to this July high close at 66, and then the 100-day or the 200-day simple moving average at 75. So 75 and this 67, 68, 67 zone is our next targets if it can break above 50. Notice how this ascending resistance line is lining right up with that 200-day simple moving average, signaling the potential target if the uptrend can continue. It needs to stay above that 100-day simple moving average at 41 to be a good play with this setup. If it drops back below, that's going to be a red flag signaling more consolidation. Okay, take a look at the ANTH chart. This is another chart that's been, you know, it took a long time to set up, okay, because we have been on this one for a while, and you know, sometimes, you know, charts take a while to get going. You know, we were on top of this back here when in August and September when it started breaking this middle Bollinger Band. You know, we've been looking for a new uptrend to begin. Notice here in September it turned the green line into support. That's the 50-day simple moving average, and then it worked the whole month of October on turning the gold line into support. That's the 100-day simple moving average at 152. Notice that the green line crossed the gold line to the upside. That's a signal the chart is building strength. And then today, okay, so yesterday there was a close above resistance. So this close above the June 13th closing price yesterday, that signaled more upside potential. That was the high close resistance level to break, along with this October level, the October high. It closed above those levels. It signaled more upside, and it was really nice follow through today. Notice this has had multiple green volume bars in a row, so it's on a big run, and what it's doing now, it's hitting the 200-day simple moving average at 238. Now being on a multi-day run, it could take a pause here at the 200-day simple moving average. If it does, you really want to see EMA 4 at 204 hold. As long as that's holding, the chart is super strong. If it closes above this red line at 238, that's going to signal more upside potential, and then we'll start talking about this gap over here. There's a gap from back in March, and then as you can see here, the top of the gap is this candle right here, and the bottom of the gap is this candle right here. And so the top of the gap here at 360 is the target if it can break above 238. So that would be really nice percentage gains back up to the bottom of the gap if the 200-day simple moving average can turn into support. And then one more to take a look at in this video is IPDN or IPDN, and this stock, you know, it pulled that, you know, head fake. This is what nobody, if you're a bull, you don't like to see this happen. This is one of the problems with thinly traded stocks. Okay, notice that the average daily volume is super low on this stock. Okay, so that makes it a risk, number one. Okay, so when you see the big volume, you have to be careful of them possibly diluting and selling shares into the rally, and that's exactly what happened here. Notice it hit this 100-day simple moving average at 464, formed a long upper wick. This is what dilution looks like on a chart. When a company dumps shares into a run, this is how it turns out on a chart. You get this long upper wick wick with the big volume spike. If I put in accumulation distribution and shaken money flow indicators, you would see a big spike down today. Even though the share price was up, the indicator spiked down, signaling bearish divergence and dilution. And so there was a bullish development. It wasn't all doom and gloom. There was a close above the dotted purple line, which is the middle Bollinger Band at 297. So in order for this to be in play, if it is going to be in play, it has to stay above 297. If it drops below, it'll be a risk to hold. Look what happens when the stock gets below the middle Bollinger Band. Major downside risk. If it can hold that level, the next target will be the 50-day simple moving average at 374. It's got a huge wick here. It could gap up tomorrow and wouldn't have a gap to fill below. If it drops below that middle Bollinger Band, the play is dead. If it can run back up to that 50-day simple moving average, it will keep it back in play. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, come check us out at our chat. We've got this nice chat going now. It's got all the bells and whistles. It's really good, and we'd like to have everybody come and check it out. Okay, thank you. I'll post the link on the YouTube video so you can check it out through the below the video on YouTube. Okay, thank you.